All right. Hello, everyone, again, and welcome back to yet another video. This week has been a bit interesting. We're going to be doing another weekly outlook. For this week, it is the 26th of June, 2025. And last week was a bit of a crazy one. So let's just remind ourselves of how fast things have changed and where we think the market is headed, as looking at some of the fundamentals and also just looking at some of the technical indicators that we do have. So last week threw us off slightly because Trump's unexpected tariff announcement sent waves through global supply chain that hit companies like Apple and others, but traders reacted really fast. But that's not all that happened. We also saw some interesting moves in the US dollar, surprisingly, some stable futures, and a very wild ride for Bitcoin as it did hit some crazy all-time highs at $111,000. So in this video, we're going to break down all of it. Key topics are what drove the moves, and most importantly, what to look out for in the week ahead so you can stay ahead of the game. So let's dive right in. So first up, let's talk about Apple. Let's talk about what really shook things up. So Trump's master plan, depending on who you ask, last Thursday dropped a bombshell, a 25% tariff targeting iPhones made outside of the US. So Apple, as you can see here on the chart, immediately dropped 3%, closing at about $195.27, the lowest that it has been in the past 2 weeks. However, this is not just about Apple's share price, but it's about the US economy in general. So for beginners, what is a tariff? Think of it like an extra tax on imported goods. So if iPhones are made in China and then brought into the US, this tax makes them more expensive for American buyers. The real story here really is that Apple has massive exposure to global supply chains, especially in China and India. So Apple, again, just can't wake up tomorrow and move all production overnight back to the US. And that is an issue. But this is not just an Apple problem. Investors know that these tariffs also will push up the prices for consumers because then the iPhones become more expensive if we try to manufacture them in the US. And then this will mess around with global shipping and it will hurt the overall confidence in the tech market. So this, therefore, is a big reminder of how geopolitical tensions do affect the market. And this is a big one in terms of geopolitical risk. So it means big US companies are heavily affected by what governments do on a global scale. The ripple effect hit broader tech in that Nasdaq dropped 1% before recovering. Even Europe felt it when Trump announced this because Germany's DAX fell 1.54%, hurting big names like BMW and Volkswagen, which could be the next targets. This is because Trump, again, I think once he's done with tech, might continue imposing these tariffs, and cars manufactured out of the US will be hit with much bigger tariffs. So key things that I'll be watching out for this week: keeping a close eye on Apple's $192 support level right here. And then I'll also be looking at Nasdaq's pivot right here. We can see that there's a slight range, but if either of these ones break down with a high volume, then it could signal a broader move out of risky assets. So next up, we are going to be looking at the currency world. The dollar has been affected after Trump's announcement last week. So let's see what's been going on. So a fascinating shift in the currency world is what we've been seeing. So the US dollar isn't collapsing, but it's fading. And that could be even more significant. By Friday, the dollar index, or the DXY, symbol DXY, closed at 99.05, its lowest in 2 weeks. For those of us who are not familiar with the DXY measures the dollar's strength against a basket of major currencies. So this is the dollar index. When the DXY or the DXY goes down, it means the dollar is weakening compared to those currencies. So again, DXY measures the dollar strength against a basket of other major currencies. So basically, how is the dollar faring or performing against a group of other major currencies? So when the dollar index is going down, this means that the dollar is weakening compared to those currencies. And vice versa, if the dollar index goes up, it means that the dollar is strengthening against those currencies. So again, looking at what happened last week, closing at 99.05, the lowest the DXY or the dollar index has been in the past couple of weeks. This wasn't just a sudden panic. It was a slow accumulation of signals. If you can look at the charts here, we can see that we've been gradually and steadily moving downwards. My analysis possibly was I wanted to see a slight pullback and then a continuation to the downside. But as you can see here, price didn't really come back all the way up here. Hit my resistance at the 157 level and then came down, broke support at 149. And that's currently still where we are at the moment. As of today, Monday, we are at the 007 level, still quite low. And we do have some more demand sitting down here. Possibly we could see the dollar index still dropping, especially if the Eurozone retaliates with some of these tariffs. We'll see what happens in this coming week. Again, this is why the markets are very interesting. They just show us a reflection of what's going on in the world. So it was a slow accumulation of signals. Then something also very interesting happened is that Moody's downgraded US credit, and Trump's huge spending proposal also caused some panic about America's long-term financial health. So people started asking questions. And these are major, major fundamental factors. This signals a sentiment shift, possibly that global capital, basically big investors' money, is looking for places that seem a bit more stable or offer better returns. This is why we also saw that there was a big rally last week on gold coming out of Thursday lows here. We can see that we continue to form higher highs and higher lows, higher highs, higher lows, breaking continuous break of structure, higher highs, higher lows, higher highs, higher lows, and we seem to be headed for these highs all the way up here. We have a support at the 3262 zone or level, and we want to see price sort of go after these weak highs all the way to the upside, possibly even give us some all-time highs in the past couple of months. Who knows? So again, we are seeing that big money is moving from risky assets into some safer zones because of the panic that is in the market at the moment. So we also saw that the euro and pound gained a lot of strength from surprisingly good economic data, and whispers of a possible Bank of Japan policy shift gave the yen a boost. So three major currencies getting stronger while the dollar weakened is a question to ask ourselves. Then that's a pattern we haven't seen consistently in a very long time. But now we are seeing that the euro has been strengthening consistently, moving up. And now we are actually possibly looking for it to break above this support level, this resistance level, at the 1403 level and go all the way up, possibly to the 1.15 levels up here, which will be interesting highs that we haven't seen in a while, right? And then the British pound as well has been strengthening. We can see that big rally to the upside. We do have our support zone here at 1.343 or the 358 level. We possibly could see it go all the way up to the 7500s. That could be an interesting thing to see. Those are levels we haven't seen in quite some time. I think maybe beginning of last year or mid last year is when the British pound was all the way up here. So very interesting sentiments. Of course, we've also seen the Bank of Japan doing its things, and the Japanese yen has also been strengthening quite a bit. We can see that we came from our highs all the way up here in the beginning of the month at the 562 level, and we've been dropping consistently, creating lower highs and lower lows, lower highs and lower lows, breaking of structure confidently and consistently all the way down. We do have a strong support level here at the 976 level, but who knows what's going to happen, especially this week where a lot of volatility is expected. We might just see this continued drop by the Japanese, by USD JPY as the dollar weakens and the Japanese yen maintains its strength. So a key level to be watching out for the DXY especially is around this 98,500, 98,400 level. We want to see that level sort of hold, but if the dollar breaks cleanly below this level, it flips the narrative from a slow decline to a full-blown trend of weakness. So if we continue to see this sort of price action, as the Dixie just keeps going down, we are likely in for a continuation of the weakening dollar, because now we'll have broken some of these structural lows, and then we should be targeting some lows down here. So this could lead to money flowing into other riskier or higher yielding currencies. But this just isn't about inflation or interest rates at the moment, which is a lot of the big data that we have been focusing on for quite some time, especially if you've been following the Forex markets or the financial markets. We've been talking about interest rates, inflation rates, possibly unemployment has also been a thing. But these two have been like key factors that we've been looking at. But now it's about confidence and stability in the economy that is really causing a lot of stir in the market. So be ready for potential shifts in major currency pairs this week, because the markets are about to be a bit more volatile.